Hello everyone and welcome to today's webinar on moving from compliance to advisory with CCH OneClick and Finsit. I'm going to begin today by introducing the presenters for today. So you have with you from the Wolters Kluwer team, we've got myself, Gareth Cram. I'm the Director of Product Strategy and Business Transformation here in the UK business for Wolters Kluwer. I've been with Wolters Kluwer for the past 3 years and moved over to the product strategy role in the summer of this year. I've worked in a number of solution providers for the industry, so I've been working closely with accountants for the past 18 or so years. My sidekick, I'm joined today by Phil Thornton. Phil is the lead product manager for a number of our digital offerings. So Phil has led Making Tax Digital for VAT, for example. He leads our open integration program, Twinfield, Basecone, and also is leading on advisory services, which you'll see today in a moment where Phil takes you through a demonstration. So we'll start today by exploring some of the drivers for change of moving from compliance to advisory before we get into that product demonstration that I just mentioned. Now, when we do get into the product demonstration, we'll be placing a survey link in the chat window, and you'll find that chat window at the top right-hand side of your screen. It's got a little chat button there when you hover over it, and you'll see the opportunity to click on the link. Now, why do we do that? Well, it's vital that we're developing customer-led solutions that support you in growing your practices and also support you in working better with your clients. And your feedback is so paramount and so key to making sure that we're developing the right solutions on the back of feedback from yourselves. So why the need to change, however? So over the past decade, you've told us that the challenges that you've been facing into within your practices have remained remarkably consistent. So yes, the order of those challenges may have changed a little from time to time in terms of the priority that you place them in, and maybe influenced by different factors such as economic pressures or political landscapes, for example. Now, those challenges were historically with things like how to gain greater profitability, how to get closer to your clients, how to utilize this proliferation of technology that we're seeing in our industry in the right way, which is being driven by digitalization, and able to also hire the right talent into your business to enable you to remain competitive in what is a very competitive market. But specifically today, we're going to talk about what's driving the change towards advisory services and why as a community is there a need to continuously assess our way of working. So you'll see on the screen there's half a dozen drivers, and I'm just going to pick out a couple for the moment. So first of all, we know that the accounting profession is transforming at a rapid pace, largely in effect driven by digitalization. Phil here is one of a number of people who was very keen for Making Tax Digital for income tax to progress, for example, because he led out that solution for us, and it is available if anybody would wish to partake in the pilot scheme still. But so technology, partly driven by Making Tax Digital, is transforming our industry. The other thing I'll pick out on the bottom left-hand side there, those that are two areas linked to profitability and linked to commoditization of compliance work. So we're still seeing that practices are needing to offer out extended offerings to broaden their services portfolio in order to remain competitive and to remain profitable. We're also seeing that compliance work is no longer valued as highly as maybe it wasn't a little while ago. And the argument is that compliance work itself, so things like bookkeeping, payroll, finalizing a set of accounts, that those elements itself aren't held in the same high regard amongst some of your SME clients as they perhaps were. They are often perceived as something that is forced upon them by HMRC, and therefore they challenge the value of that. It's whether they're a baker, butcher, candlestick maker, they want to go on and run their business, and that's where they see high value. We're also seeing new disruptive firms entering the market. These firms are very highly automated and they can undercut traditional practices. They are looking to maximize automation at every stage. They are looking to maximize the technology that is on offer to them at every stage of the customer journey. And with that, they're looking to grow their practices, and usually it is at the expense of others who are maybe a little slower to adapt. And finally, on this one here as well, technology itself isn't enough. So we will have all made decisions in the past, which we were very comfortable with those decisions from a technology decision, from a technology perspective, that we've implemented a new technology, for example, internally within a business, and then haven't quite obtain the full ROI or the full benefits that we expected. And we initially looked towards the technology as the reason why we haven't obtained full ROI, full benefits. And sometimes it can actually be more about that as an organization, as a company, that maybe the internal colleagues within the organization weren't ready for change itself. So there's a number of things that are driving changes within, driving this change from traditional compliance to advisory. Now, one of the biggest factors for me, however, and I'm sure a number of you have seen this chart before, is where high value services are going to be the growth driver for the next 10 years. So if I pick out a couple of these, for example, let's look at level 1. So this is the traditional compliance work that I referred to earlier. So that bookkeeping, payroll, the tax return, for example. Those firms that are focusing in on solely these services can expect to see growth of 0 to 3% annually over the next 10 years. Compare that to level 3, however, where this high value added services sits. Advisory work sits within here. Things like benchmarking, things like wealth management, things like interactive regular reporting are deemed to be the offerings, the service portfolio offerings from accountants that will enable you to grow at more in line with that 10 to 20% growth. So we're seeing a significant drive towards advisory services. We're seeing a change in our industry. We're seeing there's a need to adopt new service portfolio offerings. We're seeing that if you do adopt those service portfolio offerings, you're much more likely to grow at that double-digit trajectory as a practice. Now, many of you will already be offering some form of advice today, higher value added advice. Even if it's a one-off conversation as part of a year-end compliance routine, for example. I'm sure many of you have responded to that question from clients, can I just ask a little question? Can I just ask one more question? And in this area here is often where you will find yourselves almost commoditizing yourselves that higher value added services. So where you may answer a question with using all of that experience and all of that insight that you've gained as a practice, and it may start with something like, well, in my experience with other clients in your industry, this is how I see them performing. This is how I see them achieving their results. And therefore, what I suggest is we need to look at X, Y, Z for your company. And that's probably something that resonates with many of you. So many of you will already be offering higher value added services. Many of you will not be referring to them as that. You're almost just giving them away in terms of it's your approach to trying to support your clients. However, if it's not managed in such a way, if it's not formalized in such a way, then it's likely to be inefficient. and therefore it's likely to be not as profitable as perhaps it could be. So for example, if you're not using the right tools and approach to be able to offer those added value services to your clients, it may be that you come off the telephone or email from that, can I just ask one further question, and you're straight into your bookkeeping software or into accounts production, you're straight into Excel, and then putting that information into Word, for example, in a format that you wish to make sure that the information that you wish to provide to your clients is represented in a way that is in keeping with the brand of your practice. If you're having to work hard at sourcing this information and then displaying it back to your clients, then it's unlikely to be as profitable as it could be. Now, we at Maltese Fluid did a significant amount of research on this, and as you can see, we went out to over 700 practices across 6 countries to understand where practices are on their advisory journey. So on the left-hand side here, we've got a view of what practices are currently doing today. So probably no surprise that tax planning is up there and some way out from the others. You can see it over 70%. Not surprising, I guess, given the link to compliance. However, it quickly drops away with forecasting then at less than 50%, all the way down to benchmarking at about 17%. So only about 17% of practices today are offering benchmarking advisory services to their customers. Now, if you look to the right, however, and you compare that to intention, so the blue chart is about future intention. And as you can see, there's a bit of a switch around in terms of priorities here. So regular reporting dashboards and benchmarking both lead the pace here in terms of what customers are intending to do. You may or may not be able to see the bottom of the screen though. Those percentages are still relatively small, however. So if we take benchmarking, it's at about 17%. So about 17% of practices are intending to offer benchmarking as an added value service to their clients. And what surprised me a little when I saw this research is, if we take benchmarking in terms of what people are doing today on the left-hand side, so about 15%, and what customers are intending to do, which is about another 17%, so 32% of you are either offering it today, so 1 in 3 of you are already either offering benchmarking today, or you are intending to in the very near future. Now, 32% is clearly well beyond early adoption stage. Early adoption stage for a practice for an industry in terms of adopting a new service or a new technology would normally be at the kind of the 5% mid-single digit numbers. But so 32% one tells us that this is in acceleration mode. So I'm expecting benchmarking in this example to continue to increase significantly over the coming months and next couple of years. And secondly, however, 32% still seems relatively low to me if you keep in mind the previous chart that I showed you where double-digit growth is going to come from. So if you knew that in order to obtain 10 to 20% annualized growth as a practice, that benchmarking, for example, was one of the services that you would want to be considering in order to deliver that kind of growth, then I would have expected benchmarking to be higher up there as an intention. So we've heard about the reasons for change. We've heard about what the industry is telling us in terms of the journey that they're on, and we know customers are in some way, shape or form probably delivering some of these advisory services today, even if they don't label them and brand them as such. So why what's stopping clients, what's stopping yourselves as accountants, as practice leaders in terms of delivering these? Well, one of the ones that we'll come on to is, where do you get started? Sometimes it's a case of, where do I start with this? But one of the things that we're seeing from a research perspective is with regards to time and getting the time to do this, and other things getting in the way, which is what this slide here is demonstrating. So In most organizations, you've generally got two types of activity taking place. You've got maintenance activities, and these are things that you do every single day to get the job done. For example, following up on customer queries, finalizing that tax return. It's the things that you do every single day. You've then also got development activities. So these are things that tend to be usually a one-off activity. When you're looking to, in some shape or form, either grow yourself as an individual or indeed develop and grow your own practice. So these can often be strategic things where you're looking in terms of where do we go next, what's the new services that we can be offering, something that you may be doing for the first time. Once you've done it and you've established it, it then becomes BAU. So organizations tend to have those two conflicting interests, two conflicting demands on their time, development versus maintenance in any organization. Now, as a business, we tend not to report on a daily basis against development activities. We do tend to be all over maintenance activities, for example, in your KPIs, in your management dashboards, for example. I'm sure you're reporting on things like how many new clients we've onboarded this month, what's our rate of client attrition, what's our client profitability, what's our response times to clients, what's our billable utilization, what's our efficiency in submitting timesheets, for example. All those things which let's classify as business as usual for the purpose of this are very much front and center in terms of your reporting. And as soon as one of those things goes off, as soon as one of those things flashes red on your dashboard, it is likely to immediately take you away from those development opportunities, how you develop new clients, develop new portfolio, new services. So our role, we take our role in what is very important, very seriously, and part of our role in terms of our product portfolio is to ensure that we are delivering solutions to you that gives you time back, that automates as much of the maintenance activities as humanly possible so that you get the opportunity to add further value to your business, to add further growth to your business, and focus on the things that you want to do and where you want to take the direction of your practice. And then the other thing I mentioned was, where do you start? So here's a little bit of a kind of a roadmap in terms of considerations that you may wish to consider if you're either not started this journey yet in terms of compliance to advisory, or likewise you may be somewhere in this journey right now. So the first thing, step one, is embracing the technology that you've got within your practice today. So how do you free up time? How do we create time within the compliance area of the practice to enable you to focus on those higher value services? So within the Wolters Kluwer suite that you'll be using, either all of it or certain components of, you can move through from receipt, expense capture, through into online bookkeeping, and then into accounts production, and then into accounts to tax computation creation, without the need to rekey a single piece of information. So first things first, how do we embrace the digitalization that is afoot within our practice to enable us to free up compliance time to invest our time in higher value added services? Secondly, assessment of skills. So undertake a review of the skills within your practice. Ensure that you've got the right people with the right skills today in order to offer the additional services that you're intended to. If we don't have them, then how do we bridge the gap through the development of your people, the investment in your existing people, or through the recruitment opportunities that you may have open right now in terms of challenging the type of person that you're looking to recruit in the future and potentially their background and skill set. And it's key to be really clear about the expectations of the role when you're looking to offer advisory services and you're recruiting somebody on that basis. Step three, customer profiling. So advisory services won't necessarily be right for everybody straight away. So it's about targeting the right clients. You will already know across your customer base which customers will benefit from specific additional advisory services. It won't come on a plate as easily as them giving you a telephone call or an email saying, good morning, I would love some benchmarking, additional added value services, of course. It's more linked to the questions and listening to the questions that they're asking you on the back of any kind of interaction that will give you the clue, that will give you the trigger that this individual SME, that this individual client is primed for a certain kind of additional services. And of course, you will already segment your customers and you will know where those ones which actually they would like an annual interaction with you and nothing more. So that may not be your low-hanging fruit. It doesn't mean that you wouldn't wish to revisit them in the future, but it's about targeting that low-hanging fruit first, targeting those SMEs and clients who are giving you every indication that they are that they would be prepared, willing, and they are looking for somebody to deliver an added value service to them. Fourth is that you profile your customers. You've got a good idea of what their requirements are and what your initial requirements could look like. And you're from that, you're then able to start building out what your portfolio looks like. So from the questions that you're being asked, from the nature of the industries that you tend to lead and manage on, it may be that benchmarking, for example, is something that you believe is right for your business. It might be that you get an awful lot of questions similar to what are other firms doing? What are other clients in this kind of industry already doing? So consider the questions that you're being asked by your clients, the types of industries that you're supporting right now, and that will help guide you in where you can start building out your services portfolio. So you've used digitalization, you've created capacity, you've got the right people in roles, you've segmented your customer base, and I'd like you to understand who would benefit most from your services. And then it's about considering what solutions you could use that will support you in doing this, because there are a number of them on the market. That will depend upon which is right for you, depends upon how you want to interact with your customers on a day-to-day or periodic basis. Now, when you've devised your services portfolio, one of the next considerations is how are you going to price for it? Well, the research that we did in what's true in the UK and across Europe came back with a number of interesting pieces of information. So, first of all, 50% of advisors are going to bill for advisory services on a time basis. 44% are including it within their services and are bundling it within their standard fee, and 24% of advisors are looking to do it based on the value of their work. So let's explore those a little further. So 50% of advisors billing on a time basis. So your research told us that we'd expect this to decline further. We're talking about the importance of automation, making things more efficient, helping you to be more productive, lowering the effort that it takes to deliver something for your practice and for your clients. So if it's going to take less time, then there's clearly a bit of a debate or whether you want to be billing it on a time basis. Secondly, for that 44% number. So 44% are wrapping it into their standard fee. And arguably this makes some sense because in theory, with the commoditization of that compliance work, some advisors are seeing as additional added value services as a way of protecting their existing fees. And so that was I guess wasn't a surprise when we got that information back. And 24% of advisors are doing it on the value of the work. So see, for example, specifically something like helping a client, helping an SME to raise finances, a really significant and important added value service, and therefore really important to understand the value that you're generating, the value that you're creating for your clients on areas like that, and therefore billing it appropriately. Now there was one other area that was really interesting, not significant enough to make it onto the slide, but something I want to share with you anyway. It's only very small numbers at the moment, but we're starting to see just a very early trend of some practices even looking to offer compliance services as FOC, as a free of charge service, so compliance as a free of charge. Their thinking being that they'll offer their free of charge compliance in order to gain access to that higher added value services opportunity. Now, as I say, this was really very, very early adopter stage right now, and we will continue to monitor that closely through continued research, and we'll continue to share what's happening with that amongst our customer group on a regular basis, whether that starts to extend further, starts to accelerate, or likewise, whether it actually burns out. So, thinking about the solutions you're going to use and what's in market today, what our customers told us at the back of this research was there are so many advisory solutions out there on the market today that are starting to be implemented in practices. So practices are recognizing the need to offer advisory services, and they're going out there and looking to see what's in the market and making a choice. What we're seeing, however, is that those solutions aren't being widely adopted yet. So that early investment is being made, but they're not proliferating across their full client base yet. So they may still be using it with 1 or 2 clients as they start to develop their portfolio, their service portfolio, understand their billing mechanism, and start to build out with a small number of clients first. Importantly, what we're also seeing is the majority are aimed at client self-service to enable the client to self-serve on the advisory services element itself, which is a bit of an oxymoron for us, because if we think about the real growth drivers as being that added value services, why would we offer that up self-service to the individuals, to clients? That's something that we see the practice still wanting to control. Fourth, a significant number of practices are still using Word and Excel to provide advisory services. And if that's the case, if you're having to pull information in from multiple sources and then produce it in a way that reflects the brand of your practice, then that's unlikely to be as efficient as it possibly could be. And quite clearly, what we saw from the research is greater efficiency can be used by using the right tools and automating the services as much as possible. So that was a bit of context there in terms of what's happening in advisory, what the research is telling us, a little bit of some of the drivers, and a bit of challenge of why you wouldn't want to get involved in advisory services right now, given the growth trajectory of advisory services. I'm now going to hand over to Phil, who's going to introduce one of the tools that we're going to be looking to offer in the very short term to help support you on this journey.
Okay, thank you very much, Gareth. Just before we get started, hopefully you can see a little flashing orange chat box on the right-hand side. If you click on that, there will be a link to a survey, and when we get to the product demo, you should be able to complete that survey. As Gareth mentioned earlier, it's really important to us as part of the work that we're doing now with our advisory solutions that we get as much feedback as possible throughout each stage of the process in terms of bringing that product to market. So what am I going to be showing today? We've been working with our European colleagues for a number of months now, and what we're doing is we're localizing what is currently a leading European advisory solution for our UK customers. And we're going to show you that product today, and what we are also doing is we are actively recruiting our customers to join a pilot of that solution. So again, if you like what you see and you think it can offer value to your clients, please do on the survey itself mark your interest in joining the pilot, and we will be in touch very soon following this webinar to start that onboarding process. So just to give you a bit of a background on our solution is called Finsit. And a bit of a background on the where Finsit came from. So Finsit's founders were accountants in practice, and what they quickly realised was that the process for producing reports for their clients was not an efficient process. There was multiple solutions in the process and a number of different ways of getting information to the client. And then even once they provided that information to the client wasn't necessarily using the reports in the way that the advisor had intended. So what all this meant was there was a lot of hard work going into that process, but the output wasn't necessarily being used in the right way. So Finsit was developed as a platform that not only supports clients in their understanding of the information you as accountants are providing, but also to facilitate and enable advisory conversations as you move forward. Just to touch on the research that Gareth has already referenced, the reason I'm bringing this back up is if we look on the right-hand side, on the graph on the right-hand side, and look at the advisory services that practices are looking to offer, regular reporting, dashboards and snapshots came out top as part of that research. And that is exactly where the Finsit solution sits. So again, it just it emphasises the need for a solution for our customers in this space. So in terms of some of the pain points that Finsit resolves, we've probably already covered some of these in the intro already, but from an advisor perspective, your clients don't necessarily maybe read or understand the reports that you're sending. Perhaps the P&Ls and balance sheets aren't given the required level of detail that a business needs to be able to make the right decisions moving forward. There's a need from advisors to transition from compliance to advisory, as Gareth's obviously covered in some detail. In the process of producing all of these reports and all of this information needs to be an efficient one to ensure it remains profitable for the practice. And from a client perspective, well, they're wanting to improve their financial position, but like I say, perhaps the P&L and the balance sheets that are being provided on a regular basis aren't necessarily giving them the information they need to be able to understand what are the decisions they need to be able to make to move their business forward. So that's very much where the Finsit solution sits in terms of offering that greater level of detail. So Finsit, it's already a success story in Scandinavia. It was launched in Sweden and it has been there for a number of years now. And you can see on the right-hand side, we have a number of customers that you will recognise already using this solution in our Scandinavian business. The Finsit solution, although the size of these practices are obviously large, it does cater for practices of all sizes, and we do have customers in our Scandinavian business who are using this of all sizes. But this is just to emphasise to you some practices that you will be aware of. The plan is it is currently being rolled out in Norway, and it will be rolled out gradually across Europe over the next 12 months. And obviously the UK will be part of that. So without further ado, let's get into a product demonstration of Finsit, and I'll just switch my screen over to the product. And hopefully you can now see my screen. Yes, good. So this is the, well, that's actually the first thing to say about Finsit is it's a true white label solution. So to all intents and purposes, this won't feel like a Wolters Kluwer product that you're providing to your clients. This could be something that could sit on your website as a login from your own website. Many of our clients in Sweden, practices in Sweden, use this as a reporting online kind of service that they can log in directly, so employees of the practice and your clients can log in directly through your website, and when they come in they'll see their information as you can see here. This is the advisor view, so this is a list of my clients that I have and that I manage, and in terms of adding a new client, it's a very, very simple process. What you'll see here is actually a list of all of the bookkeeping products that Finsit currently integrates with, but many of them are obviously Scandinavian. As part of the localization process for the UK, we'll be removing this, and what we will be doing is integrating this with our CCH Open Integration program, which is obviously part of our CCH OneClick proposition, for those of you who are familiar. But what you will see is we do already have an import from zero option. And for those of you who are familiar with Open Integration, you'll understand that when I select Import from Zero and select Next, that will go off to zero and bring all of the information back. So there's no manual setup as such. It's very much bringing the information through the Zero APIs into Finsit. And when that's happened, you can see this is one company that we've set up earlier. You'll see this is the information that's come directly from Zero. So you see we've got an import from Zero option over on the right hand side here. We've got all of the company information that's been brought through. I have a list of all of the users that are at the business on the SME side, but also the advisors in the practice who also have access to this client. And then in the chart of accounts and KPI section, this is where we create so the chart of accounts. So I've gone with the zero default chart of accounts, and then we have a number of KPIs that we can set as default, and we'll come on to that later in the demonstration. But just to give you an example of the types of KPIs, you can see under visible KPIs, there is a huge list of KPIs that we can set as our default KPIs. To enter this client, you select the graph option, and that will bring up the company information. And you can see here that we're taken straight into a home page. Now, what I'm going to start with, actually, rather than going through the home page, I'm going to go into an area called period reports. And the reason I'm going into period reports first is this is the most used functionality that we have within our Scandinavian customers and how they are using the product. And the reason being is period reports is the functionality that you'll use this tool for on an ongoing basis. So whether that's monthly reports, quarterly reports, half yearly or annually, this is where you will go to produce the reports for your clients. So we'll click on there and we'll select new report. What that's going to do is that's going to create a new report for the month that I'm in, which is March 2019. And what you can see here, that automatically creates a list or a lot of information there that I can then send to my client. What I can choose is I can select the report sections that I want to show. So I'm not going to show the income statement. I'm not going to show the balance sheet, for example, but I want to show these other three areas. And what you have here is an opportunity to enter some text, but we'll come back to that in a moment, because what I want to do is do a little bit of analysis on what's happening within March itself. And what we can see here by looking at these numbers is that from an income perspective, income is higher than it ever has been, but from a profitability perspective, it's less than I would expect based on the income. So actually at this stage, I'm probably not wanting to send this report to the client until I've done a little bit of analysis or research on what's making up those numbers and what's the reason, to enable me to complete my advisory elements in this section here. So what I'm going to do is I'm going to come out of the report and I'm going to use Finsit as the basis for doing that understanding and that analysis. So what you can do is on any graph that you see, you can add and remove any of the elements by clicking on any of them here. And you can see this is a repetition of what we had in the report. But what I want to do is I want to see what made that up. So we have a few options at the bottom here that we can start by doing that analysis. We have business trend. Now, business trend would be more valuable if we were looking at a year-on-year comparison, but I'm actually wanting to look in year. So what we have here, and you can see at the bottom here, it's already starting to give you some analysis of what makes up the numbers in that month. But what I want to do is go to business activity, because this is very much showing me the information in year. And within this screen, we can show this period by day, week, or month. But I'm going to focus on day. I do like this day view. I think it's a really good visual representation of what's going on in the business. I can also, this information is being brought through from Xero, and what I can do is I can break that down into the tracking categories within Xero. So I can show, for example, the South region, just the South region. But what I'm going to do is actually show all dimensions or all tracking categories. And I can see straight away that there's a couple of things standing out here. So from an income perspective, we've got the 12th of March looks high. From a cost perspective, we've got the 16th of March looks high. And if I click on any of those days, what you'll see is Finsit also brings through the transactional detail. So it's not just bringing through the nominal ledger balances, it's also bringing through all of the transactional entries that support the information. So I can see here, from an income perspective, we had nearly £1,700 of project management income. So that's something that I probably want to reference when I do my report. And also on the 16th of March, we had quite a bit of cost there, and we can see that our photocopier needed repairing in the month, and that accounted for nearly £900. So we can see straight away why the results were showing the way they were. So what I'm going to do is, now I'm happy with those results, I'm going to go back and create the period report. I'm going to do as I did before and just show the business overview. I've got some KPIs. Again, these KPIs can be predetermined from the settings screen as we showed earlier, and we have some attachments which show an income statement and a balance sheet. Each area you have an option to enter your own advisory against each area, but what I'm going to do is I'm just going to enter something in the top here to say very simply, March performance was strong due to project management. Income for profit impacted due to broken photocopier. Let's discuss in our meeting on Friday. And then once I'm happy with that, I can publish this report. And then once I've published that report, there's a few things that I can do with it. I can, on the right-hand side here, I can print the report and take it to my meeting on Friday. I can export the report and email it, but in reality, what you would probably do is down at the bottom here, you've got send mail notification. When you select that, it will send an email to your client that's set up in the system, and it'll have a hyperlink that they'll click on and see this report. You can, if new information's come in, perhaps there's been some changes in the zero data, you can withdraw the report, and that just means it'll close down that report and you can create a new report with the new data. And if you have a number of different people in the practice working on a client, you can show history. This is essentially a timeline that shows you who's been doing what and when with this particular client. And another piece of functionality that I really like, if we go back to this advisory element that we're offering here, if I select new report from this report, that advisory may be the start of a story or a conversation that I'm wanting to build with that client. What I don't want to do is have to keep re-entering that data every month that I create a new report. So what you can do there is create a new report from this report, and that will create a report that keeps all of that information within the new report that's being created. So that's period reports. Quickly going through some of the other areas of the product. On the home screen, we have what's called company. This is essentially a visual representation of your balance sheet. We have some KPIs. These are the default KPIs. Again, that was set up within the settings screen. They can be changed on the fly within that settings screen. If we go into these KPIs, it gives you a bit of information of what that involves. And then you can drill down into the detail and continue drilling down further. All of these screens also give quite nice little descriptions of what it is that is shown and how it's calculated. We also have at the bottom of that home screen a couple of little league tables here. One that shows the top income by month and the top profit and loss by month as well. So again, when we were doing our analysis, this may be somewhere where we would go to say actually March was your top performing income on record so far. So that's another piece of advice that we can offer. Just going down the left-hand side here and looking at any of the other areas that we may not have touched on, we also have compare KPIs. Again, this is default KPIs set up from within the settings screen. We can show a number of different periods, so we can go down from 1 period all the way up to 60 periods comparison. We can clear these if we don't like these, or we can actually add KPIs very simply by just selecting add KPI on the right-hand side and selecting one of the KPIs there, and again that'll keep them there, or I can just clear all of the KPIs and start again if I so wish. We also have reports within the product, so by default we have the income statement, balance sheet, a budget report, accounts payable, accounts receivable, and a liquidity report, which is essentially a 5-week cash flow. But what I really want to show today is the custom reports functionality that exists within Finsit. Just to show you how easy it is, so Finsit is also a very powerful yet simple to use report designer. So what I'm going to do here is I'm going to create a very simple profit and loss that just compares year on year and shows a variance also. So what I'm going to do is I'm going to add a couple of columns. I've got one for March 2019. I'm going to click on this column and I'm going to move that back simply 12 months. So you can see here I'm comparing March 2009 against March 2018. I'm also going to add another column. By default, it's called deviation. I personally don't like that. So what you can simply do is go to Edit Custom Title, and we can call that whatever we like. So we'll call that variance. And then I'm going to add some income. And then I'm going to add some costs. On the variance side, what we have to do also is make sure that the base values and the deviated values are selected. And then what we can see there is we now have a profit and loss very simply. I mean, that's taken 30, 40 seconds to create quite a simple report there, but actually that offers quite a lot of value. That's just one example of the kind of reports you can produce. But obviously there's a lot more that you can do with this solution in terms of reports. And there's just one other thing that we wanted to show, which is search the ledger. Again, when we think about the analysis that you will be doing as part of the period reports process, one of the things is you may want to look for individual transactions that you're aware of. So I'm just going to put random into here and click on search, and you can see that's listed all of the transactions that exist with that value. What else Finsit can do though, it's not just bringing the transactional detail in, I can also drill down into the individual journals and the nominal ledgers that make up that amount also. So that's a really, really high level view of Finsit. And like I say, the next stages that we'll be going to is to a pilot. Just to remind you of the survey that we've got in the webinar at the moment within the chat option. It'd be really great if you could give us some feedback on what you've seen, and if you would like to be part of that pilot, please do reference it on that survey, and we will be in touch very soon. Or alternatively, it's something where you want to take them, because we will be, this webinar has been recorded. You can take this, you can show it to other colleagues in your practice. Maybe you want to have a couple of weeks to have a think about it. By all means, contact an account manager in the next couple of weeks, and we can add you to the list for consideration within the pilot also. So we'll just switch back to our presentation. I think we've covered that. We also have a new advisory white paper which is available to download. The link is on there, but also you'll get a copy of these. You'll get a copy of this webinar, so don't feel like you've got to quickly write that down now. But that is available on our website to download, and it will cover a lot of what Gareth and I have been talking about today, and a little bit more as well. And obviously you can share that with colleagues in your practice. So now it's just time for any questions. Let's see what we have. We actually only have one question, which is around whether the webinar will be available on demand. And the answer to that is yes, there will be a pack that's sent round after this with that. Just to maybe, we did get a lot of questions in the roadshows that we recently did, where we presented this information, and it was probably worth just maybe sharing a couple of them in case it has been something that you've just not had a chance to log. So the first one is, we often get asked is, will Finsit be part of CCH OneClick? And the answer to that is absolutely, it will be integrated. A big part of the pilot will be focusing on to what level the integration exists. And what I mean by that is we're really keen to understand about particularly the client workspace side of OneClick and how we surface information in there. Gareth touched on the client self-service and how many of the solutions on the market are client self-service. Where we think Finsit is very different is it's very much an advisor-led solution. It's giving you the power to offer those advisory services and really pass that information on to the client. So although we can integrate this into, say, the client workspace and produce some of that information, we're really keen to understand to what level, so that we're not eating up some of the value that you can offer through using a solution like this.
Another question that's often asked, Phil, if you wouldn't mind answering, is currently you demonstrated the integration with Xero, and there was a number of Scandinavian bookkeeping software in there. So will this often the question is, will this integrate beyond just Xero?
Yeah, so yeah, absolutely. So the idea is, and we did touch on it a little bit in the demonstrations, but just to be absolutely clear on what this is going to look like, we have the CCH Open Integration Program, and what that does is that consumes data from a number of bookkeeping packages such as Xero, QuickBooks Online, Sage 1, Exact, and Twinfield. When we launch this product, the option you'll have is to integrate with the open integration. So essentially, you'll get all of those bookkeeping solutions essentially free of charge as part of that integration. The plan from an open integration perspective is to increase the number of solutions that exist within that open integration program. So Sage 50 is next on our list. That is a huge priority for us. So within the coming next 2, 3, 4 months, that's the plan to very much get that integrated into the open integration. Then we'll be focusing on Free Agent, and then we also have ClearBooks. And if there's any other solutions out there that you would like to see us considering as part of the open integration program, again, like everything else, please do let us know, and we'll get that added to the list.
So very much a whistle-stop tour there from both a product perspective and that context at the beginning about what's happening in our industry. So we've talked through the drivers for change, the drivers from compliance into advisory. We talked through the research in terms of what people are doing today and what the intention is. We talked about how people are looking to monetize and how practices are looking to bill for these additional services. And we've also demonstrated a solution that would love your feedback on, as Phil said, to get involved in the pilot that would help you, enable you as a practice to be able to provide this service to clients. Final thing for me, just in terms of an observation, when we've been out on the road showing our customers recently, was linked to the creating capacity within your own practice, because this is an additional these are additional services that you may be looking to offer to your clients. And what clients were saying was none of them are currently sitting twiddling their thumbs on a daily basis, wondering how they can fill their time. You know, their time is already precious. One observation that we certainly had, and we support a number of clients through off the back of the roadshows, was are you using your existing suite of Wolters Kluwer products to full effect? Are you using all of the automation that is in there presently to support you to create capacity to enable you to do this? If it's something that you're not doing right now, or you're unsure, you're not sure if you're getting all the benefits from your suite today, then please speak to your account manager. It was almost equally exciting and alarming in equal measures in terms of what you've got at your fingertips today that you may or may not be benefiting from. But thank you so much for your time today, and we both know that there are a million other things that you could be doing with your time, so we really appreciate you spending that with us. As Phil mentioned, we will be making the recorded webinar available for you to look at your pleasure. But thank you from Phil and I, thank you very much.